What did you think about this quote, guys? Obviously not stolen from JR and Y Crypto. Today I'm going to talk about the markets and the key points you have to consider in order to stay afloat in the ocean of FUD. Fear, uncertainty and doubt. That has been recently spreading around faster than all those vacation pictures on your IG feed. But before I get onto the quality content, I would like to welcome anyone new. Hi, my name is Vlad and I will help you get educated about investing in crypto. I know that this might seem weird, but one thing that makes athletes stand out from regular investors, especially in the stock market, is their level of confidence. Kobe Bryant is a perfect example of this because of his Mamba mentality. Kobe's ability to keep calm and not crack under pressure is truly phenomenal. His confidence led him and the Lakers team to winning 5 championships. Quite the achievement if you ask me. Even if you are not an athlete, one key point that you have to take away is that you need to have a strong character in order to benefit from the movement of the markets. A high level of confidence ensures that you will not sell amidst a market crash, which, if you have been in crypto for a long time, becomes a regular thing. Just imagine how many people sold at the 30 to 40k range after buying in at 60k Bitcoin. This happens because people get FOMO'd into buying at all-time highs and are left wondering where all their college savings disappeared. If you're new to crypto, you might be tempted to sell when everything is crashing out of fear of your investment going to zero. And that might actually happen in some cases. Dogecoin. However, if the fundamentals of a project are strong and you understand that market corrections are a part of the cryptocurrency cycle, you will not be affected by the market dips. In my case, I have invested in the Cardano blockchain by holding its native token ADA. And I know that even though ADA recently dipped, it is still on the right trajectory to overthrow Ethereum and become a blockchain used worldwide. Does that mean that it can't and won't fail? No. But the probability of this happening is quite low when taking into consideration the risk to reward ratio. One way to amass confidence is getting informed about the project you're going to invest in. Being well informed is essential because it ensures that you will know your project's long-term goals and potential, and won't be affected by all the FUD and short-term price trends. However, if the roadmap or the white paper of a project isn't available online, you should start wondering if it's worth your money. A strategy that I noticed works quite well when regarding buying into the market is doing the exact opposite of what you hear on the news. The best example I can give regarding this is everyone's beloved Dogecoin. If you followed the news, you might know that Dogecoin's price plunged after the Saturday Night Live show featuring Elon Musk. However, if you didn't follow the news, I will give you a summary of what happened. Elon Musk, the third richest person in the world, is also a strong Dogecoin advocate. His tweets made Dogecoin's price skyrocket by about 1300% over the last couple months. In anticipation of the event, the price of the coin rose substantially. Everyone expected more support from their beloved Doge father and were very optimistic about the future of Doge. Investors were excited about what he had to say and were sure that the coin will reach $1. What ended up happening, however, was the exact opposite. Large Dogecoin whales dumped their holdings in anticipation of everyone selling at $1. I know that doing the exact opposite of everyone might seem counterintuitive at first, but you should consider the following. At the moment, many institutional investors from around the world are getting the green light to invest in the cryptocurrency markets, but they aren't really willing to buy in at a peak price. So what is the solution? Crash the markets by selling a large amount of coins and pay media sites to post articles that will benefit their cause. These articles can include overemphasized claims or news that aren't backed by anything. Warren Buffett once said that it is wise for investors to be fearful when others are greedy and greedy when others are fearful. You can use a tool such as the BTC Fear and Greed index as an indication of when you might sell, link in the video description. Before I get on to the next chapter, I have to plug my channel. I mean, come on, don't tell me you didn't expect this. I don't know if you noticed, but I got a new camera. Now you won't have to wonder in which century the video was recorded. By dropping a like and subscribing to my channel, you are helping me buy more huddle noodles, thus making me not starve to death. No, but seriously, I appreciate every single like, comment and new subscriber, so thank you for supporting my channel, guys. Okay, now that the shameless plug is out of the way, let's continue. The best way to preserve your profits in the crypto space is to simply hold. However, and I don't mean that you should do this, if you were to sell at all-time highs and buy during the bear market, you would certainly be in a better position than if you would have simply kept your original investment. But that doesn't mean you have to do this, because 99% of the time you won't be able to time the markets correctly. So think through your plan carefully, because alongside with higher reward comes higher risk. I'm going to show the S&P 500 as an example of what might happen when you try to time the markets. For those unfamiliar with the stock market, the S&P 500 is an index fund made up of the 500 largest companies listed on the stock exchanges in the United States. It basically takes a small share of the 500 biggest companies and turns it into a fund, so that it's easier for the retail investor to manage. This is why it is called the Standard & Poor's 500. Quite the flattering name if you ask me. The chart below shows how $10,000 invested in the S&P 500 index for the 20-year period of 1999 through 2018 would have performed under various scenarios. As you can see by this chart, if you would have missed the 10 best performing days of the entire 20 years, you would have lost a 3.4% yearly ROI, or basically $14,950 over the span of 20 years. Things turn negative when taking into consideration the loss of the top 20 best performing days. And if you consider inflation, you would have lost quite a substantial amount of money if you would have failed at timing the markets. Alright, now that you're 1000% smarter, let's get back to crypto. Another thing that you have to take into consideration when investing is that smart money, also known as whales or large holders, are way ahead of the retail investor. Let's think of Bitcoin as an example of this. Over at Twitter and every single news outlet, I'm sure that you saw many claims of Bitcoin going to 100,000 within this bull market or by the end of the year. What whales might do in this case is sell at the 85 to 90k range in anticipation of the major sell-off. With the markets being in a major dip, you would have lost quite a substantial amount of profit. Anticipating market movements, however, is not easy, with major news of countries banning BTC or any other FUD. This is why it's so important to know your plan during this bull run. A plan will help you lock in your gains and not get overly greedy. Besides this, the news are only affecting crypto short term and are the part of its long-term growth. Some long-term factors that might affect a coin's price is its network updates. This might come in the form of a hard fork or a network update. Besides this, other long-term factors are the Bitcoin halving or a worldwide ban of crypto, which can be considered a black swan event. For those wondering what is a Bitcoin halving, it's an event that happens every 4 years that artificially increases the scarcity of BTC. If you have no idea what a BTC halving is and want to know why it's so important, I will leave a link to its explanation. In short terms, a Bitcoin halving is an event when the mining rewards for a block get cut in half. Quite similar to my grades when I started this YouTube channel. Although I could go over many more aspects of price trends, I would like to keep this video short. As always, congratulations if you made it to the end of the video. Don't forget to drop a like, subscribe and leave a comment letting me know which topics I should cover in the following videos. This was the Modern Teenage Investor. Peace out!